As everyone knows, there's the debt markets are not that great, the equity markets aren't that great, but there's a lot of money out there. It's just a question of how do you access that? How do you advise the people who need the capital? How do you advise the people who want to put the capital to work? And I'm here today with Kathy Sweeney, who's the principal of Milford Senior Housing Advisors, which she just started. And she is going to provide some of the solutions to some of the capital problems for the senior housing industry.
Solve all your problems right here.
We hope so. And after a decade of you've been investing and advising, you worked with AEW, you were the advisor to GPT on their investment in all the benchmark assisted living portfolios. Now you want to attract investors to the industry. And primarily, investors with a long-term investment horizon and obviously looking at good opportunities. What's the first point of attack now that you've launched your new career?
Steve, thank you for the opportunity. And I would say my first point of attack is really I kind of put senior housing and capital into two buckets. So I have the first bucket, which are all of those owners, operators, and investors who are already in senior housing. And then and that is sort of my first approach, is to really talk to the folks who are already in the industry. And that can be
see
capital.
What they need.
See what they need. For the operators, the owners, see what they need. The investors see what they need. Many of the early investors are looking to, they're not long-term, they're looking to have some sort of exit. And then when I'm finished with, sort of that bucket, I go to institutional capital. And that's where I really get to have a few already sort of partially baked strategies, but can go to institutional capital and find out what do they need, how do they view the sector, and really inform them of how the sector has performed. Many of them have, some of them have already invested. Many of them have been hearing about it through the NACREIF information. And from my ear to the ground, there is some movement out there in institutional land and wanting to know more and understand more.
And I know, and you know the private equity world, pretty well, given where you've worked. And to me, the performance of the industry has been so good. I mean, this should be the ultimate no-brainer for some of these people you're going to talk to. What's the holdup? I mean, what is, what's their cause for concern for investing here?
Well, it's not as if capital has had nothing else to do for the last couple of years. Capital has certainly been not putting its big toe in the water on new strategies. The capital is much more comfortable in kind of their original sandbox or their most recent sandbox and investing in where their comfort zone is and where they have history and where they have some good performance in the past. So the hurdle for seniors housing is both a really understanding the risk and understanding the opportunities and understanding how best to evaluate a particular opportunity or a particular strategy. We also have to, even though those of us who are in seniors housing like to think of ourselves as a big pond, we are a small pond. We are still a niche. In today's environment of great deal of uncertainty and caution, you're not going to find institutional capital that's going to want to make a big splash in a brand new niche.
But a niche that has outperformed every other sector, and I think to me, that's the thing to harp on.
Absolutely, yeah. Couldn't agree more.
Now, with all your work with GPT and travel, I'm assuming back and forth to Australia, you probably had a little bit of an ear to the ground on any kind of institutional money there, but are you going to be looking at any kind of foreign money that really came into market 10 years ago and kind of disappeared, it seems?
It's an interesting question. With regard to, first Australia, there is a lot of capital in Australia, and I could go to Australia for capital. The issue is that for Australians to invest here in the U.S. in a niche business, it would be a hurdle. It would probably be something that would be part of a much larger investment strategy for them. Call it, an opportunistic fund, so to speak, that would be opportunistic in a lot of different types of real estate, not just seniors housing. So to come out of Australia with dedicated seniors housing money would not be the most effective way to start. And then in terms of other capital, it's not, I mean, look, what, I'm 3 weeks old, so,
I know.
I don't have a great deal of resources at this point. So my view is, because of the NACREIF information and because of the domestic investors who have done quite well in the sector here, that it makes most sense for me to go domestically into domestic sources. That said, if there were some offshore sources who were already looking at it and wanting some further advice or due diligence or insight, I would be happy to take that on.
And then with the increased sophistication of the business, the seniors housing business since the mid-1990s, I mean, that was always a cause of concern. Is that concern pretty much gone from an investor point of view?
And the concern specifically about?
Not enough managers out there, if things go wrong, the managers really don't know what they're doing.
You're talking more about the operators,
yes,
right?
The operators.
Yeah, the operators. That's a very good question, because I ask myself this a lot. First of all, having spent 3.5 years embedded with an operator, I have a much deeper appreciation of the challenges, the complexities, and the successes and the failures, and truthfully the pending failures or pending successes that an operator can get themselves into. So if I think back to my career early in this sector about 14 years ago, what I wish I knew, then what I know now, the sophistication level of operators generally has increased. The number of talented professionals in the industry have increased. That said, there are still, it's a highly fragmented market. I think there was a recent study done for the NIC investment case that says that the top 10 operators operate only 25% of senior housing stock, which is, still pretty amazing. And 14 years ago, we looked at this sector as a consolidation play, and here it is, still a consolidation play all this time later. And it really is a sector that needs more operating talent, and it will have a voracious appetite for operating talent. There have been some mergers and acquisitions that have occurred that have then allowed some talent to go to some of the smaller or regional operators. I think the industry has done a fairly good job at educating and providing experiences for operators. But absolutely, this is operating businesses inside of real estate, and at the end of the day, the value is very largely driven by the operations that occur inside, and strong operating talent is a must.
So much better than the 1990s, but still room for improvement.
Yes.
Yeah. So
yes.
on the operator side, on your strategic advising, do you think you're going to be looking more at advising them on growth and acquisition strategies, on operation strategies, or both? Is there going to be one focus? Yes to both.
Operation strategies, I can give a sort of top level view to, and help with some areas of talent attraction and identification, and to be able to give sort of an unbiased view of how operations is occurring and performing. But more so for operators, what I think I can help them with is their capital strategies. Many operators today really grew kind of organically from a capital standpoint and on an ad hoc level, and had capital, either they attracted the capital or capital came to them with probably a fairly high price tag. And so they found themselves with a balance sheet and a capital strategy that's, really constraining their ability to grow. And I think I can help them evaluate their current strategy, make some recommendations, and execute for them if that would be helpful.
Yeah, no, I mean it would be, because the good providers aren't necessarily very good on the understanding how to fund the growth. I mean, they can grow their company operationally, but when it comes to the balance of equity and debt and where to get it, they need help. Talk about debt for a sec. Get your crystal ball out. What do you think is going to happen? I mean, throughout your career, all your investments and all the providers dealt with, they needed to get debt capital. Do you think that's going to, how long will it take to get a better market for that? You talked to a lot of, the Fannie and Freddie people and other banks.
Yeah.
What's your take on that, do you think?
Well, thank God for the GSEs and for HUD. Obviously, we have just, we entered a cycle in 2008, and I'm not sure that we've really exited it yet, even though the recession has officially been called to have ended a year plus ago. We are in a period of very massive deleveraging. So to not have a lot of leverage available in a delevering environment makes a ton of sense. That said, there have been some, other than the GSEs and HUD, there have been some interim sources of capital that have become available. KeyBank is doing some interim, they'll park some deals on an interim basis on their balance sheet. Not at all balance sheet lending, really interim bridge type financing. Of course, Kevin McMean with MidCap Financial is also doing, has had for a few years now, his line that is available for interim and bridge type
Which
financing.
he just expanded significantly.
Yep. But to your point, you're likely looking for efficient, long-term flows of capital, debt capital into the sector, and I don't see the sector changing and opening itself up more in debt. Certainly for the next 6 months, a year from now, I think that that there might be some more momentum. We might see some CMBS restart in the industry, and I do hear that the life companies are coming in a small way, and hopefully that will grow as well. And then of course on the GSE side, getting some clarity from the federal government on what exactly is the long-term purpose for those entities and how they will operate and how they will continue to be able to support senior housing will be important. And I do see that clarity coming in the next 12 months.
Yeah, and I think everyone's assuming that Fannie and Freddie will still be around for senior housing because there's not a good argument for them not to be around.
Very true.
Because they've outperformed most of their other loan portfolios.
Very true. You answered your question well.
Well, I try to sometimes. Well, listen. Good luck. I hope you're successful and can get a lot of business and we can certainly refer people your way.
Great. Well, thank you. Thanks for the opportunity.
All right.